Hello, this is Jordan. This video is being recorded on Monday, August 22nd, 2022. Thank you so much for joining me. I hope you all had a great weekend. In this video, I am going to provide some updated analysis of the silver price, where it could be headed in the short term, medium term, intermediate term. And I have done a few videos on this, I think 2 or 3 over the last 12 or 18 months. And so silver has broken down and lost that support at $22. So that causes me to shift my analysis, obviously. So I'm going to get into that here and what I think is happening in the bigger picture with respect to silver. So I have 3 charts. They're not all that different, but these are important historical long-term charts. And so first off, we're looking at a chart of silver. That's a weekly line chart. So this is using the weekly closing price dating back to 1977. Now below that, we have the gold silver ratio, and below that, we have the net speculative position in the market. So let's talk about the silver price first. And if you look at the red arrows, we can see on the weekly chart that shows why and how $22 has been an important level, even dating back to after the peak in 1980. And so that, as a bull, that was my hope during this correction, that silver that it was going to hold above 22. In that case, you'd have a bull flag pattern developing. I mentioned that in a recent video, not a recent video, but months ago. So obviously silver lost 22. So that's a pretty significant breakdown. And if you look at that in the box there, that's just I'm a precious metals bull, but looking at that box and that topping action in silver, that's really difficult to understate the significance of that. And so if you look at a measured target from that, you're looking at a minimum downside target of $16. And also where silver has bounced from the low to mid 18s. And this level, you can see this is a significant level going back 15 years or so. And, in the last several months, my hope was that this level would be the bottom for this correction or bear market, whatever you want to call it. But I see the probability of that, I just think, is decreasing with each day and week. This is also a level that I believe it's a Fibonacci level. If you look at the COVID crash low, I think this is the 62% retracement of that. And also, if you look at the 80-month moving average, I've showed this in past videos, that comes in the low to mid 18s. So this is an important price level. And obviously, if silver were to break that, it would be significant. If silver is going to break below 18 in a significant way, I don't think it's going to bottom at 16. There's limited evidence of that. So when you look at a long-term chart, you look at just below 15 in the $14 range, look at all those blue arrows, we can see that this is a significant level. I mean, it's been a significant level even there, what was it, 1982, 1983. So if we see silver break below 18, you're going to have to think about, $14 or 15, mid to high 14s. That's a level where potentially you want to get really, really bullish. On the macro picture, we have the dollar rising. I believe it almost hit 110 today. I haven't looked at it in a few hours. But the gold silver rate, when the dollar is rising the way it is, typically the gold silver ratio follows that. And, we could be going into a significant recession. Bear market rally in the stock market could be over. Now, all these things will be bullish for precious metals, but we need some time. We need things to get worse. Fed to shift, Fed being forced to cut rates. Boom. Then you get the big rebound in precious metals. But we're not there yet. There's still some things that have to happen. And so going back to the gold silver ratio, the trend is up and there's not that much resistance. If looking here in the low 90s, if the ratio surpasses 93, 94, I mean, it looks like it's going to go to 100. And, potentially I could see this ratio going to 110, 115. Maybe does it retest the high at 120? Maybe. I don't know. I'm just speculating. I'm just telling you the trend is up, and it's more likely than not that we're going to continue to see gold outperform silver. That's not good for silver. So that also feeds into the potential for silver to decline to $14. Now, on the sentiment side, the bulls can say, wait, look at the net speculative position there. A couple weeks ago, got very close to zero, where the net spec position, there was almost no specs, no spec long positions. Excuse me. So we can see, it did bounce back in the last couple weeks, but nevertheless, looking at the net spec position, and again, I look at this as a percentage of open interest. So if you're in the negatives, that means that the speculators are actually net short the market because for the most part, they're net long. And the net longs are very, very low right now. And if you can see the vertical lines there, late 2018 and then 2019, that 2019, I think it got to zero, the bottom in late 2018, along with the significant gold bottom there. The Fed market starting to sniff out that the Fed was shifting course just a couple months before the last hike. So you had a fundamental catalyst there, for a big rally. You didn't have that in 2013 when precious metals were having a major breakdown. So I favor the macro fundamentals first, the price action of silver first. Those are the things I look at. The net spec position, in other words, the net spec position, it's in a really good position right now, but given everything that's happening, we could see it go negative. We could see the specs have a modest amount of negative positions when silver ultimately bottoms. So I guess what I'm trying to say is, when we look at the macro fundamentals right now, we look at the price action, that's very concerning. Even if the net spec position is super bullish, I don't think we're going to see a huge turnaround in the market. So it's good to know that it's in position, and it will remain in position ultimately. When the macro fundamentals turn and the price action gets down to that really big long-term support. So let me get to the next chart, and we have silver there at the bottom, similar chart. It's a little cleaner. You can see $14, how significant that is. You can see 18 significant, but at the top we're looking at the ratio silver against the S&P 500, and I know that JC Peretz, who's a great technician, he loves to shit on gold and silver whenever he gets the chance. I remember him posting this chart. It was a 10 or 15 year chart a couple months back. He posted a couple days ago, and it really had me thinking, what's going on in the very, very big picture. It's why I love looking at 50-year, 100-year charts. You're going to get much, much more context when you're just looking at 5 or 10 or 15 years. So if silver breaks down below 18 and it trades to $14 or $15, to me that could set up, you can see the yellow circle there, that could set up a huge Donald Trump voice, a huge double bottom in this ratio. Where we are here and now, you can see, silver has broken down from support since 2018. So, short to medium term, it's breaking down. That looks negative. However, again, if we see this trending lower and we get closer and closer to the Fed having to shift course, silver gets closer and closer to really strong support at 14.15. This ratio here could be setting up for a monster double bottom. So you have to keep that in mind. Last thing, because I don't want to make this video too long, but in this chart we have the CPI inflation at the bottom, and then we have at the top here, we've already looked at this, silver in blue, silver against the S&P in black. But the point of this is I really want to make a comparison to 1968 and that major market peak, because there's a couple things here. Look at the yellow. And you can see that the peak in the CPI, that's the vertical line at the end of 1969, or right on 1970. That's when CPI inflation peaked. So inflation had a huge breakout, very significant, It had a mini breakout. I didn't put it on the chart. It had a mini breakout in 64 or 65. Then it had even more significant breakout, I believe, in 1968. However, that immediately caused, a downturn in risk assets. But silver peaked. I mean, it looks like silver peaked at least a year before inflation peaked, probably even more than that. So that's pretty similar to what gold and silver peaked. If inflation, if the CPI, the rate of inflation just peaked, I mean that's almost 2 years after gold and silver peaked. So that's a similarity to today. Silver declined 51%. A 51% decline. What does that put us at? $14 or $15. So that's another thing to consider. But more importantly, look at the ratio there. Look at the black arrows. So that's silver against the S&P 500. That came down during that decline in the late 60s and 1970. That ratio came down to a significant support level, right? Back down to where it was before. So that's another potential similarity to what could come up or what is happening and what could come about over the next 3, 6, 9 months. And of course, after that, I mean, silver, even in the early 70s, I think it went up 4.5 times. So, that's it's really interesting because looking back then, silver is most correlated with inflation and rising inflation. And back then in the late 60s, you'd be looking at this and saying, why did silver peak more than a year before the peak in inflation? Inflation had this significant breakout. Inflation reached a 17-year high back then. Why is silver not responding? Same thing in the last 2 years. I mean, you can look at that and see the CPI, obviously a significant breakout of a 30-year downtrend, plus just nominally speaking at a 40-year high. We all know, that's even with the bullshit calculations that they changed in the 80s. But it's all very similar to what happened in the late 1960s. And again, the turning point when the Fed has to stop because the economy is in a recession and unemployment starts rising. We're not there yet, but we're definitely we're in a little bit of hell right now, and because I'm talking about $14, $15 silver, that could continue in the short to midterm, unfortunately. But I looking at this potential historical analog, it's potentially really comforting because it tells us just the upside potential that silver could have after it gets out of this shitty period. Okay, that was a lot to take in. Thank you so much for listening. I really appreciate it. Leave me a comment. Let me know what you think, and I'll see you guys again in the next video.